Here's the painful truth most investors don't want to hear. By the time you start thinking about credibility, it's already too late. Because most investors believe I'll focus on credibility when I get a deal. Once I have something under contract, I'll start posting. When I need capital, I'll ramp up my visibility. But trust doesn't work that way. You can't build trust overnight, especially when you're holding a deal under contract that needs to get funded, and investors can feel that urgency. Here's a check-in, my first check-in with you. So if you're here live, I want you to answer this in the comments. If you are watching the replay, I want you to still answer it in the comments because I do check it when the notifications come up. So have you ever seen someone post looking for JV partner ASAP or looking for investors on their Facebook post or on LinkedIn? What usually happens when someone does that is they get like, oh, congratulations, and a couple of likes, but zero qualified leads. And what I mean by that, zero people reaching out to them saying, hey, I've got money, I'm interested, when you put up a post like this. So that's not a deal problem. It's a credibility timing problem. It's not that your deal isn't good enough. It's that you haven't built that credibility yet for people to be able to reach out to you. So if you only show up when the money is actually needed, what does this signal? It signals urgency, desperation, it signals scarcity, it signals reactivity. And capital does not move toward reactive energy, only to proactive energy. Investors don't just evaluate your deal. They evaluate your pattern. Are you consistent? Are you visible? Are you structured? Or do you only appear when there's something to sell, when you need something from them? And that's the difference. So why does this happen? Well, because credibility isn't built in that moment of need. It's built over months before. It's like a marriage. It's a relationship. You need to have the dating process first. So, and this dating process looks like this. It's through consistency, authenticity, transparency, social proofing, like showing what other people are saying, what you've done. There's a study by Edelman Trust Barometer, and that they found 81% of people need to trust someone before doing business with them. So we can safely assume the same applies for investors. No one funds someone if they don't trust them. And that trust is not built overnight. So the real question becomes, if an investor Googles you today, what do they find? Do they find a professional story or do they find a blank page? Do they find your digital resume or do they find nothing? So your credibility is your digital resume. And every post, every comment, every conversation, every blog, everything you write there contributes to it. So today, what I'm going to do is I am going to walk you through 4 simple ways to build your credibility before you even need capital. So we're going to go through these 4 simple ways. The first one is decide what you want to be known for. That is immediately the first thing you need to do. What do you want to be known for? And then show evidence of the experience. build trust through transparency, and we'll talk through what all of this looks like, and create a trail of credibility online. These are just simple shifts, but they completely change how investors perceive you. So let's go through and break it down one by one for you. So the first one is decide what you want to be known for. So this is around clarity about your niche, your focus, and your expertise. Decide what you want to be known for means make sure that you have clarity around your niche, your focus, and your expertise. Don't just say real estate investor. Be very specific. Investors fund clarity. So you want this to like jump out and say, hey, they're talking to me. If your position is broad, then your credibility gets diluted. So you want to be very specific. Being specific builds authority. So when you say something like, I help corporate professionals invest passively in small multifamily buildings in Alberta, do you see how clear that is? That's the kind of clarity you need. So clarity reduces the risk in investors' minds. Right away, they know exactly what you're doing and how you're doing it. So ask yourself, what do I want to be known for? What asset class am I doing? What specific strategy do I do? What specific type of investor am I looking for? What specific market am I in? If you're across Canada, then say Canada. If you're in the US, then say US. If you're in a specific province or a specific state, state state that in there. I didn't mean to put that pun in there, but start reinforcing that consistency in content and conversations where you're saying what you do, who you help. Those need to be consistent in your content and in your conversations. So number two is show evidence of that experience. Show proof of what you're thinking, how you're learning, and how you're executing. People can't be next to you as you're going about your daily work in real life. They can't be following you right through, but they can if you give them examples on social media. So it's up to you to show it so that people can actually follow you along. So it's not bragging, it's not hype, it's evidence. Investors don't just fund outcomes, they fund operators. They want to see how you think, how you assess risk, how you solve problems, how you overcome those challenges that will come as you go through your real estate investing. So even if you're newer, you have this evidence, maybe not in real estate, but maybe you can start showing evidence of things that in your job, like how did you overcome something? You can start showing that, but you can also show things like lessons from deals. Just because you haven't closed on a deal doesn't mean you can't show lessons you've learned from going through looking at deals, insights from your due diligence, like team collaborations. Who are you in your team? How are you collaborating? How did you assess that person? What has that team done? Because a lot of times your team is just as important as you are. Showing that you've got a good team behind you will show that you are investable. So you want to be talking about your team collaborations, any mentorship that you're getting, what you're learning from that. Market analysis. Show how you're doing your market analysis. Why is that market important? Why are you in it? Why is that market a good place to invest in? So show all of those things. Share stories like, here's what I learned from this inspection. And here's why we walked away from this deal, right? Here's how we structured this partnership. All of these things you can share. Those stories build your authority. They're more than just big things coming. They're showing that progress. They are building who you are. They're building your authority and they're building your credibility. So the next one is build transparency, build trust through transparency. And this just continues what I'm talking about. Show your process, not just your wins. Wins are great and everybody wants to celebrate them, but people want to see how you think. They want to see how your process is. So polish doesn't mean trust. Transparency does. So you don't wait until you have it perfect. People trust transparency, authenticity. That's what they trust. Investors know things don't always go perfectly. When you acknowledge risk, when you address the elephant in the room instead of glossing over it, when you talk about delays and you talk about lessons learned, you signal professionalism because people know things will happen. But what they care about is how do you handle things when challenges are faced, when you're blocked by a wall. What do you do about that? So professional operators don't hide risk. They bring out the risk and they tell people this is what we're doing to mitigate it. So they manage that risk, right? So share your due diligence process. So this is all part of managing risk. It makes them feel secure if they're seeing all the due diligence that you're doing. The risks you're evaluating, show them, here, we thought about this. We thought about this. This could happen. That could happen, right? Show them that you're evaluating it and you have plans. Your conservative assumptions, share that with them. The mistakes you've learned from, share that. Authenticity builds safety. People feel safe if they know that you're authentic. Safety then builds trust, and then trust, gets what it does? It unlocks capital for you. So that's exactly what we're trying to do. We're trying to have that flow of authenticity, giving the safety. Safety is building that trust, and then trust is going to unlock capital. So number 4 is create a trail of credibility. That's your digital footprint. And this is what we're doing by saying to you, like, put these things in stories, put them in emails. If you've got people's email addresses, and send these same things that you're putting in your post, send it by email, because different people go in different places. Some people are like attached to their emails. And as soon as an email pop up, oh, what's that? And read it, right? Others are attached to their social media. So have them in both places. Your digital footprint is extremely important, and it is going to be that trail that you're showing. It is your credibility trail. Everything someone sees when they look you up. Your profile should be doing what? They see your profile. That's the first thing they see. So you want that to look professional and let them know who you are, what you do. They see your posts, right? Your post is showing that trail. They see your photos, they see your comments. So those are the important things that they're seeing, and you want to make sure that it is showing that digital footprint that you want people to know. Why does this matter? An investor will research you before they fund you. And if your online presence isn't consistent, if it's inconsistent, if it's unclear, and if it's inactive, like, I've looked up some people to find out more about them, and I haven't seen anything since 2023. And even in 2023, it was maybe a Christmas post or something like that. So if it's inactive, people hesitate. Even if your deal is solid, I'm sorry, but that's how people today judge you. They will Google you. They will go to your social media profiles and check it out. And if there is nothing there, right away, it's a red flag for them. So don't be surprised if you had a great conversation with someone and they seemed interested, but then they ghost you because they probably went to your social media profile and found nothing there except maybe your food pictures or your pictures with animals. You want it to be your digital footprint about your real estate investing. So what do you do instead? Audit your online presence. I want you to go and Google yourself. I want you to look at your profile. I want you to be honest when you look at it. And I want you to look at it from that person's perspective. Go to your profile and say, if someone landed on my profile today, would they understand who I helped? Would they understand what I do, how I think, and why I'm credible? Every post is either building your case or it's leaving a blank in there. So if you're not putting anything there, you're still making an impression, but you're making the wrong impression. So it's just like they say, if you don't make a decision, you're still making a decision because you're making a decision not to make the decision. So this is the same thing. If you're not posting, if you're leaving it blank, then you're leaving invisible and you're leaving it open to their perception, which means they're going to right away think you're not credible. So here's the shift. Capital doesn't start when you have a deal. It starts when you decide to become visible. Credibility compounds just like capital does. The more consistent you show up, the less you have to raise later. This is the pitching, right? The desperation. And you will already have a pipeline the more consistent you have. So because trust will already be there. So here's my question to you. If an investor comes to your social media profile, whether it's LinkedIn or whether it's Facebook, or if they were to Google you, if an investor was to do that today, what would they see? I want you to take one step this week to strengthen your credibility trail. Every training you take, you should be putting into practice what you've learned from it. Even if it's just one simple nugget, take it away. So as a coach, that is what I require my clients to do. It's always about learn, implement, learn, implement. So for you, that one step this week to strengthen your credibility trail, what are you going to do? Maybe it's you're going to update your profile to say what you do, who you help, and how to contact you, or that you're going to be sharing a very thoughtful story, or you're going to clarify your niche because maybe you're not even there yet. Maybe you don't specifically know and can't specifically say who your investor is, who is your ideal investor client, what is your strategy, etc. Work on clarifying a niche. Or you're going to be posting an insight that's happened this week or this month recently. So drop in the comments which of these steps that you are going to do today. I want you to pop it in the comments because if you pop it in there and it's visible, then it's one step to holding you accountable as you're going to do this. And if you want to build this properly, consistently, strategically, and in a way that actually attracts aligned investors in a system, that's exactly what I coach for. I coach investors on exactly that because credibility isn't built under pressure. It is built with intention. And once you have it, raising capital feels completely different.